Euro Pound daily forecast, January 2nd, FXEmpire.com. The Euro Pound got absolutely pummeled on Friday as traders continue to show a real lack of faith in the European Union. The flow of money coming out of Europe and into the United Kingdom seems to be accelerating, and the fact that the end of the year was here didn't seem to keep traders from selling this pair. In fact, the euro did poorly against almost everything in the markets for the Friday session. The pair, of course, will run into some support at the 83 handle, as it saw it there before, but the strength of the bar on Friday and the fact that it's closing at the very bottom leads one to believe that that level will indeed give way. The British pound could also be hit going forward, but the biggest thing that it has in its advantage right now is the fact that it just simply is not the euro. The euro is absolutely the worst currency to own at the moment based on sentiment, with maybe the exception of the South African rand. The buy in this pair shouldn't even be considered, as the fundamentals in Europe will continue to dictate a lower value for the common currency, and this pair should not be an exception going forward. The 85 level, which was the scene of a massive breakdown recently, would have to be recaptured on a daily close for us to even consider the possibility of going long. It does appear that the route is on for the euro and should continue into January. Once the volume does return back to the forex market, we will more than likely see this continue. The volume could be very well held off until after the non-farm payroll numbers on Friday the 6th, which of course always moves the markets. The sentiment is very bearish on the euro, and the coming interest rates cuts out of the EU will more than likely force this pair much lower over time. The UK, however, does have a lot of financial exposure to the EU, so while this pair does look very weak, there is also the possibility the move will be very choppy as well, and in fact that's kind of what we're banking on. The trend is most certainly down now, though, and the moves in the coming year are more than likely to only be a continuation of that trend.